guys, welcome back to Cash Flow Confidence. In today's episode, I'm going to be discussing the 5 financial leaks that are completely draining your business. The first one is underpriced services. Now, in the last episode, I spoke on pricing a lot more, so I won't spend a whole lot of time on that on this episode. But the biggest point is your profit depends on your pricing first. Pricing is the first thing to get right. It's the first thing that I look at when I sign on new clients because if your pricing is wrong, there's very little ways elsewhere in the business that are going to be made up for that. And so if you find that you are draining profits and draining cash, first start with your prices. The next thing is your collections process when it comes to customer payments. So if you are on invoicing and then they pay the invoice, so you're offering terms to your clients, you have got to get that so dialed in to where it does not go over what terms that you have given your clients. So that's something that I measure with my clients is what is their days sales outstanding, meaning how on average, how many days is it taking their clients to pay their invoices? If your terms are net 30 and I see you have a day sales outstanding on average of 35 or 40, that's a problem. Here's how you nip that in the bud. What you do is, and a lot of accounting software does this anyway, like automatically, so you can set that up, but set it up such that when you send out an invoice, it starts racking up a late fee like day one that it's late. Now, I say that, but you don't have to collect on those late fees if you don't want to. They're there so that people see them and think, "Oh my gosh, I better pay this now before it turns into a monster." But most of my clients that operate on this, they don't collect the late fees because I know that's not, the greatest customer service. And so if you have clients that they're paying and say they've racked up like $100, $200 late fee, feel free to waive it. Just get money. It helps to get money in the door. That's all it does. You don't have to collect it, or you do, whatever your preference is. Beyond that, so that's automatic late fees. Beyond that, or most accounting software will send automatic payment reminders when there's outstanding invoices. So you issued an invoice, it hadn't been paid. I'm pretty sure QuickBooks will tell you even too when they've even looked at the invoice. So you can't say like, "Well, you didn't see it." But it'll start sending out email reminders once it reaches a certain point. And then beyond that, if you still have a collections issues, that's when you get on the phone. That's what I talked about a few episodes ago. That's how you keep yourself out of a cash crunch is to get on the phone and start calling people. Now, let's say, your invoicing process is net 30 terms, but your vendors are like, "Here's the bill, it's due now." That's not a good place to be. You pretty much essentially become the bank for your clients because you're having to shell out money to keep your business going. Meanwhile, your clients are just sitting on it, not paying their invoices. So don't be in that position. If you offer terms to your clients, you need to be on terms with your vendors by any means necessary. Now, obviously, a best practice is whenever you are issuing invoices, if you can, I know it depends on, the nature of your business, just have it be due on sale or, net 15 if you can start getting away with that. If collections has been an issue for you, you need to start readjusting your terms. Another thing to think about too is let's say you sign on clients for like long-term agreements, start offering incentives for them to pay, a few weeks or a few months up front. Like if you pay 3 months in full up front, you get X amount of discount. That'll often incentivize people to pay up front instead of just going to the monthly amount. Because once they see and make it big and flashy, like here's how much you save when you pay by this. One of my clients, she offers 1 year contracts and 2 year contracts. And we saw that her 2 year contracts were, like, falling off, and, pretty much all she was selling was the 1 year. So what she ended up doing was on her sales page where she had, like, payment options, she made her 2 year contract, like, huge, and here's how much money you save by locking into the 2 year, and then the 1 year was just, like, real little and wimpy and just not very exciting, and that helped. Okay, so consider doing that, offering incentives for longer agreements or for paying for a few months in advance. The next leak that you may not realize is happening is payroll misalignment. So, what I mean by that is you've got people on your team that are directly responsible for client fulfillment, and then you've got people on your team that are more admin work, like, bookkeeping and office manager, things like that, purely administrative, not customer facing at all. They need to be distinguished on your profit and loss. I talked about this a couple episodes ago, but anything that is directly involved with carrying out a client service is direct labor and needs to be included in your cost of sales for you to truly know what you're keeping on each of your offers. Your admin payroll falls into overhead. Like, that's like, people that as the revenue starts to grow, like their pay doesn't grow along with it. Whereas your direct labor, you start charging all these bigger jobs, it's going to require more hours out of them, and so their pay is going to go up along with it. Admin labor will not. So let's say, everybody's on salary, nobody is hourly. Still, for anybody that is direct labor, they need to be logging their time on what jobs they are working with, because this is going to tell you how long it takes to do these jobs, who is working more efficiently and who is not, who is overpaid and who is underpaid. So, breaking your payroll out is crucial to stopping financial leaks in your business. You cannot just have all of your labor lumped into payroll expense. That's not going to tell you anything. That's not going to tell you if your offers are viable or not. The next thing is debt misalignment. So let's say you're in debt, you've got some debt on the books. If you're in a position where you're making these enormous debt payments that are just taking a huge chunk of cash, please revisit what you've got going on, restructure where necessary. I've got a client right now, we're doing some debt restructuring because they are a cyclical business and we're still having to shell out like huge quarterly debt payments that just were not viable to the business. And so what we did instead was we got on a line of credit, wiped that original debt out, and now in the peak months where they're doing really well, they pay that line of credit down. And then in the slower months where revenue's kind of slow, they use it as they need to. But then again, in the peak months, it's paid back down. If this is the kind of business that you're in, I would highly recommend doing this, because if you have a bad kind of debt on your books, it is going to eat away at all of your cash. And the final thing where your finances may just be leaking out all over the place is owner avoidance. So I mean like living in denial of something that's going on in your business. I know you've probably got your bookkeeper. If they are sending you financial reports each month, look at them, study them, and figure out what's going on. And at the very least, I want you to start, keeping up with some KPIs in your business. It don't have to be a full workbook like I give my clients, but keep up with some of the KPIs that affect your cash the most, like the things I just mentioned, such as, customer payments, your gross margin per employee, your gross margin per offering. Keep up with those and monitor them, because if those things start to slip, everything else is going to slip along with it, and your business is just going to become one big avalanche of, money leaking out all over the place. So don't live in denial. If there's a problem going on, you feel it, you're like, something ain't right here, don't deny it. It's not going to make it better. Ignoring it won't make it go away. You need to confront it head on, open up some numbers, and figure out what's going on. And if you need help with that, that's what I do every single month, is break it open like a machine and figure out what's working and what's not. And so if that's something that you need help with, reach out to me. That's all I have for this week. See y'all next week.